Taking a follow-up look at Newmont here to see what's going on after this down move. Not looking good. Is the gold bull market over? Maybe for the time being. This is not a great setup here. I mean, you can see that's not what you want to see. This this kind of a little consolidation here, that's bad news. I mean, you see that. This is just bad news because you know what happens after this, right? I mean, that's coming down. So, Newmont is going to come down here. Maybe you get there was 1 day, 2 days. So maybe, look, today's Wednesday. Maybe by Monday or Tuesday of next week, it takes a move down to 66 here to wash out some of the uber bullishness because this is a little gap here. That price is it's like a magnet. These gaps are just magnets for price to come back to. I have no idea why, but this gap, like these gaps, they never last. I mean, gaps are bad. I don't know why. Price kind of, look at this gap here. You know, that kind of was meaningful. So I assume this gap right in here is going to be a meaningful and significant price level that, for whatever reason, there's supply that needs to get backfilled. Down here it's 66, 65, call it. So, yeah, Newmont's over. Let's take a look a little bit longer term, though, to see what the bigger picture is here. All right, let's go to a weekly. And now you can see here, not that big of a deal. All right, if we go to, let's say, where is this? Look, right here. It's kind of holding, okay? That's 73 bucks right now. So it's still in this 50 to 70 range now. So a little bit of a move in and then a pop back out. That won't be so bad. Look at this. Look at this level back here. That lines up perfectly, right? So 65. So hey, if it ends up being in a range from, this is 88 to 65 down here. That's not so bad, this range. If it just kind of does some kind of chopping around in here for a while, that's not bad at all because I'll show you why here. Look at zoom out one more time even on a monthly. Boom. Look at this. Let's zoom out. Let's zoom way out. Okay? This goes back to what, 1969? Okay? Look what's going on here. There's a big breakout above 50 here that we just got. You had this little kind of a pullback after the breakout, and now you got the up move. So hey, any kind of little chopping around way up here at the all-time highs, that's not bad. Nothing to get concerned about because you don't want to miss this. That's the main concern is you don't want to miss this big one right here. All this little stuff in here, you know, eh, yeah, it hurts, it's painful, but zoom out a little bit and see the real concern is not to miss this, okay? This is going to hurt the next summer. I mean, this gold bull market's over for the summer. Write it off. It's done. It's over. They're coming out and smashing this thing below 1900. It's over. Forget it. Done for. It's all summer's lost. It's over. But, if things get out of hand, does the market remain open and going to give you a chance to get Newmont to buy it down here, around 50-ish, 60-ish? I don't know. I don't know if they just close the markets and then it opens back up. If things get real hairy with bonds and liquidity, and repo markets, the wholesale funding market, if it gets out of control, if we get another repo rate spike, I guess the Fed fixed that with their reverse repo. Supposedly, the wholesale funding markets, the plumbing is fixed, I guess. I'm not an expert. I have no idea how that even works, but I do know this. I am an expert in this. If things get out of hand, they're just going to stop the trading. You know, it's just going to stop. Look at this one. Look at this. He's getting steeper, right? I don't know if any one of us is going to be so nimble. I know I'm not, to be able to get in and get out, get in and get out. Like Fred Hickey is really good at nailing these moves, these little 10 and 15% swings. He's good. Fred Hickey's really good at that. I'm not. I'm just gonna have to take it in the shorts all summer until you know until this is over, until all this is over, because I'm not missing. I'll tell you what I'm not going to do. I'll take it in the shorts for an entire summer, but I'm not missing this move. I'm not missing it. There's just no way. And once you zoom out, you can see that that's the likely outcome. I mean, look at this. It's been doing this since, what year is this? This is the peak back in probably 81, 80, call it 87-ish. I don't know. That's gotta mean something, you know. And then combined with this little kind of a thing, that's not good. This, I don't know. That's gotta mean something. And then zoom out, take it to now take it to something like Exxon. Now look what's going on here. What's going on with Exxon? Let's see. Yeah, I mean that's a different story, right? Look at this. Man, I don't know. I don't know about this. You had this was the perfect down here in 1969 to probably what the early 70s. You had this and a little down move there, and then you had the big breakout, a little breakout right there, right? And then another down move there, which was just perfect. Okay, and then the real move, and that started 81 was the peak in interest rates, and then that just did a big one. Newmont didn't do that, So this kind of went with the entire long duration rally, And now, I mean, geez, they got this breakout. Man, that came straight from 30 up to 80. Yeah, I don't know, but that's look. I'd be more concerned about this breakdown right here on Newmont, on Exxon. You got this breakdown that never happened before, so I'm not too convinced that all this rallying is real. I mean, yeah, I see this volume. That's, you know, but then look, try and fast forward into the future. If Exxon did something like this, okay, it would make this whole pattern a lot more recognizable, right? Rather than this. If it just does this and then a little bit of a there and then that, I don't know what that is. I've never seen that before. So yeah, Newmont makes me feel a lot better than some of these other things that are getting lumped into the commodities bull market. I mean, don't get me wrong, Exxon's the one. Exxon is That's your one right there. This was the first stock I ever bought in 2006, I believe. Yeah, I bought, I think, 100 shares of this, and I paid over $100 in commissions. Yeah, I had to buy it on the telephone. I bought this stock. This was the first one I ever bought. $100 coming and going commissions to buy and sell back then. So, don't get me wrong. I'm not saying like I still own, a little bit of this, and I always will, I suppose, just to remember the good old days. So, but it doesn't make me feel comfortable. I can't put on any size in this, And then let's take a look at, what's another commodity guy? You got energy. What about range? What about Ranger Rick, old Range Resources? Oh yeah, look at this. Look at this stuff. You know, uh, geez Louise. I mean, that's quite. This is just a V. I don't know. What does that even do? But listen, if you're a long-term investor, you know, would you rather be a buyer right here? Is this the best possible time to be buying Ranger Rick? Uh, Man, good grief. I mean, was it a great time to be buying last time it was up near 30, $40? No. So, boy, oh boy, look at this. Look at this confluence of these moving averages right here. My bet is that something like I would imagine that this blue line right here comes up to here. And then this confluence of moving averages, these are the longer term ones, like, I don't know what they are, a 200 month and a 150 month. And this blue one's the 50 month, I would guess. And then the stock does like just kind of jumps around like this, to kind of converges at this 36.50 for some years. Maybe this is, that would be my best guess because, geez, that's quite the V move up from here. So, I don't know, declining volume. The gold looks like the better and better of these commodities. You got that breakout. Let me check out some more of these golds. Like, what's Barrick? What's Barrick doing? No, 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 that's not right. I want. What is this? This is even the. This is an interesting one anyway. This is a CFD, a certificate. I forget what that is. It's a it's a certificate of something. So look at this. Look at this volume right here. You know what that coincides with? As a matter of fact, this time frame, this is 1997. Literally in September of 1996. Okay, so that would have been right in here on the Kitco Gold Forum was big trader saying he was taking a huge position and that the breakout was nigh, and then of course this happened, but then 3 years later in around 2000 2001, right when the euro came out, boom, you had that happen with gold. So I don't know, and there's no volume on that. So that was an interesting time in the gold. Now look at here with this gold. This is just a little bit better, huh? Isn't it though? You don't see these very often in the commodities, but boy, is that nice. So we're waiting, and then you got the little breakout, little itty bitty breakout. So right here at 1900, okay, let's check out this other commodity. One more. Let's check out Freeport, okay? Freeport. And here we go. Right? Same kind of look as Exxon, right? You got this. Oof, man, that's tricky. And then you got this rejection right here. So, not a good look for the Freeport. I'd expect some kind of, man, just kind of chopping. But look at this. You do have this level back here that could add something at 34. It's at $42 now. So, hey, I'd be looking for this kind of a little bit, and then a little bit, then I don't know, some kind of just sideways chopping before you get the big move a little bit later. So, maybe something like this one right here. You want to see this chopping. You want to see this chopping at the highs in order to get the big move, okay? Again, this is what you're looking for. This is what it is. This nice kind of a thing. and then a little bit of a consolidation. So here you've got kind of a rough thing. Gotta see maybe some more consolidation in here. Yeah, looking more and more like, again, the Newmonts. Check out Newmont. And let's check out ASA. The ASA. Oh, man, see what I mean? Now that's a good look. It's got a real good look to it. I mean, my goodness. It's just got this nice little tightness in here, and then the tightness coming up from the bottom here. Look at that. Just nice. Just really, really nice after this long, long base here. I mean, I'm not going to miss this one. You know what this is. It's just begging to be a little bit of a pop out, and then maybe you get a little kind of a thing, and then boom. I'm not missing that one. No way, Jose. So, yeah, be prepared. If you're a gold bull, you got to take it in the shorts this summer. It's over. I would just, honestly, uh, turn off your monitor maybe if you got a good size on. Actually, hey, you know what? Maybe don't be so cavalier about that. Take a look at, because who knows, with Canada doing what they did with the truckers, maybe all those Canadian mines you may as well write those off and consider those property of the Canadian Central Bank or something. So, maybe you check out this one. This is the Sprott. Yeah. Maybe you don't just hold your position here in these gold miners. Maybe that's dangerous. I don't know. Here's the Sprott physical one. You can actually, if you got to own like, I think it was, so it's a couple bars or a bar. It's just like $400,000 of gold or something. If you own 400,000 of that, you can get your gold. So, which you can look at the prospectus of the GLD. Hey, they say some stuff in there, but I don't know. You can read the prospectus yourself and see they got the uh, the participants, the authorized participants, and this is real tricky to figure out. Okay, I'm gonna say I've read it. I don't think they're trying to lie to us or any. I mean, actually, it's illegal for them to say anything. But you can go listen to what Tony Deeden says about his escapades with the GLD on that Grant Williams podcast, and maybe it's on a YouTube as well. And it's like, hey, I don't know. And then you got to read the prospectus on this. It's a lot to get there, but you got to understand who. The main thing to read when you read the prospectus, the main thing to understand is who are the authorized participants and how are they incentivized to move gold in and out of this thing. Okay, it's this is you got to understand that is all I can tell you. It is confusing, okay, and I wish I could really say more details about that, but you got to come to your own conclusion. I've come to my own conclusion, and at times I have owned the GLD, but when the going gets tough, I think you have to approach it from the standpoint of what if they just shut down the markets and then there is no more, buying and selling opportunities. Okay, what if they just shut them down and everything is just, you don't get any opportunities in here? I think that when you approach the markets from that standpoint, and I have for some time now, then it becomes clear, and you read the prospectus, and then you read about Sprott, it becomes more clear, okay, what you own. And, you got to know what you own and just be comfortable with it. The GLD is obviously better trading vehicle. It's more liquid. It's more popular. It's much larger. Okay, but hey, at the end of the day, I don't know. Maybe if that's your thing, just trading. Obviously, the GLD is going to be a fine instrument for that objective. But if they just close the markets and you got nothing else going on, then you got to think about that scenario as well and have a contingency plan for that, and then see if that prospectus, if the details in there, if they don't make you feel comfortable. I don't know. I'm not saying that's the case. Maybe you're smarter than me. There's a lot of guys out there who are. So hopefully that'll do something.